So normally I don't make any trades on Tuesday except for closing winning trades, and that's what I did today. So I had a put spread here. I'll show you under orders executed. I closed a put spread today, as you can see, June 12. So you can see today, May 19 was closed. So this June 12 put spread was opened. If we look lower at June 12, we can see it over here. So June 12, expiration was open May 13, collected $71. It was a SPY put spread at a 265 strike, and I closed it today, May 19, for $36. So almost 50% profit, and that is about, it took about 19 minus 13, so about 6 days. I was able to close it in 6 days, while the trade is a 30-day put spread. So if you've been watching my videos lately, you see that I've been closing a lot of put spreads for a profit lately. Although they're very small dollar amounts, percentage-wise, it's pretty good, and I can easily scale it. I can easily do more than one contract if I have more capital. What I'm looking at is the strategy, the winning percentage. The other thing I did today was I closed the put spread that I had for May 29th at a 275 strike. So if you remember, this put spread at 275 got tested last week when SPY reached 272, and I sold a call spread against it at a 295 strike. So you can see the call spread over here, May 29th, so same expiration. I sold a 295 call spread, collected $52. But today, but when the SPY traded above 295, now my call spread got tested. So what I'm supposed to do is bring the put side closer. So I'm supposed to bring the 275 closer, maybe to 285 or 280. But instead, what I did is I closed it for more than 50% profit. So if we look for May 29, when did I initially open it? The put spread for May 29, I initially opened it April 29th, collected $72. I closed it today, May 19, so all 20 days. I closed it for $26, so more than 50% profit. And the reason I closed it is I sort of deviated from the strategy, because normally I'm supposed to not make assumptions. I'm supposed to be mechanical. If SPY is going up and it's testing the call side, then I'm supposed to bring the put side closer. But instead I closed it. And the reason I closed it is because I had a feeling that the SPY was going to come back down a bit, because it's ridiculous how fast it's going up. And in fact, today you could see after hours it's trading at 291.94, so that's good. So the 291.94 price is below my call spread of 295. Now it doesn't mean that by May 29 it doesn't surpass 295, but it's right now it's looking better than what it was looking yesterday. So by closing the put spread, now I don't have to worry about the 275 strike anymore for May 29, which has 10 or 9 days to go. I just have to worry about the 295 call spread. Now my plan with the 295 call spread, so if I go in my positions, you can see that I still have the May 29 call spread at a 295 strike. It's losing money right now. I collected 54 cents to open it, and I can close it for $1.80, so I'd be losing money on this. But as time goes by and as the SPY stays below 295, I can close this trade. But if the SPY starts going above 295, what I'm going to do is I'm going to sell a put spread closer to May 29th. I'm going to sell a put spread closer to the 295 strike. So maybe 285 or even maybe 290, depending on how much time is left on the trade. But that's how I'll try to mitigate this call spread that initially I had opened to mitigate the put spread. So yeah, I was supposed to have rolled the put spread with the call spread, but just because I have a feeling that the SPY will drop, I felt like, you know what, I'll take my profit on the put side, and if I do have to sell a put spread again, I'll just sell it again. I'll be collecting less premiums, but at least it gives me a chance to worry about one thing only. The put was already more than 50% profitable. Now I'm giving a chance for the call spread to be easily closed. So basically, if the SPY goes up to 295 or 300, basically my loss will be just what I paid today to close my put spread. So I just miss out on $26 if the SPY ends up flying. So now I'm still left with the June 8th. It's an iron condor right now. It was initially a put spread at 274, 269. But when the SPY dropped to 272, I sold a 300, 305 call spread. So the 300, 305 right now is showing me a loss, as you can see here. And the put spread is showing me a small profit, but not ready to be closed, but probably close. If I remove the call here, I can see I can close it for about 63 cents about, and I think I opened it for maybe 78 cents or something. So it's not ready to be closed, but it's showing a small profit. The June 10 vertical put or put credit spread, this one is showing a small profit as well, but not ready to be closed. And then I've got the June 17, this one I opened yesterday, so it's got 29 days to go. It's actually showing me a small loss, but that's fine. My strike is 277 and I still have 29 days to go. This one actually could be problematic, but anyways, I've got 29 days to go. Still have a lot of time. So I still have a problem with the queues here because my purchase price is 221. The stock, luckily today, it dropped a little bit to 226, but my short call is at 212. So basically having a short call means that my maximum selling price is 212 by May 22nd, unless I roll it. So obviously I'm going to try to roll it. In fact, if I try to roll it right now just to see what I can get, I can buy back the 212 option. That's how I would roll it. And then I would sell the next week's option at 213, for example. Want to go a strike higher. See, I wouldn't be able to roll it for a credit. This gives me a debit. So I would have to go further out, let's say June 5th. And now I can roll it for a credit. And let's see if I can go at a higher strike at 214. No, I wouldn't be able to. So at a 213 strike, June 5th, I'd be able to roll the trade for a credit and move a strike higher and hope for the Qs to drop some more. And now as for IWM, I had a short call of 134. So yesterday when IWM was trading at 133, it was kind of close, right? But today, luckily, it dropped at 130. So now it's looking better. It's looking safer. I just need IWM to stay below 134 come May 22nd. And I can roll the call option forward easily, maybe to a 140 strike. It depends obviously where IWM is trading at. In fact, if I look to see how much I can roll it forward right now, if I decide to roll it forward right now, I can go to May 29th expiration, and I'll go, let's say, to, let's say 140 strike. I cannot do that for a credit. Let's say 138 strike, not even a credit. 137 strike, I can do it for a credit. There we go, 25 cents about. So I could roll it right now for next week's expiration at a higher strike, giving me more breathing room, and I could do it for credit. But the more I wait till Friday expiration, the closer I get, the less value there's in the time. There's less value in the call option that I'm buying back. So this year I'm buying back the call option at 134 expiring May 22nd. I'm buying back to roll forward. But if I wait till Friday, it'll be worth pennies. So and then I can go further out. I can go maybe to a 140 strike instead. So I'm going to wait till Friday, just hoping that IWM stays below 134. But luckily with today's drop, it gives me a better chance. And if you noticed MR Moderna, I was looking at it yesterday. I was actually going to make a call spread trade at a 95 strike. So as long as expiring May 22nd. So as long as Moderna stays below 95 come Friday, I keep the credit. I was going to collect about, I think, $80. I didn't make the trade because I was afraid. But definitely if I had made the trade, I would have already made the profit. In fact, let's go see what this trade is worth if I had made it. So call spread, and I was going for May 22nd, I was going for 95 strike and 100 as protection. I was going to collect about $80 yesterday. So today I could have closed it for 15 cents. So yeah, I would have made almost $50 profit in one day if I had placed this trade, but I was too afraid. But yeah, that's the power of selling options, as you could see. Lots of opportunities if you're on the right side of the trade and right side of volatility, of course. So I just wanted to give you an update of my trades today. So if you have any questions, leave in the comment section below. And like always, if you're going to open an account with Questrade to trade on the stock market, use one of my referral codes below. One of them gives you up to $250 back, depending on your deposit. And the other one gives you $50 in free trades if you open the account with a minimum $1,000 deposit, of course. Thanks for watching.